I've been trading physical commodities for more than a decade, and I've been in ways that you can't even imagine. So in this video, I'm going to share with you 7 red flags that if I see them with a new counterparty, I'll just back off from the deal and don't ever speak to them again. And please, before you click away and think, I don't need to watch videos about red flags, I'm clever enough to decipher a scam. Do you? Really? It took me years of losses, getting scammed, wasting my time to come up with this list. So it's years of returns on my experience that I'm going to share with you. So now it's your choice. You can click away, go get some cheap dopamine hits from I don't know what video, try it on your own, waste your time, waste your money, and in 2 years you'll be back here watching this video because you'll then understand how valuable it is. Or you can stay here, watch the video to the end, take note, and get one step closer to where you want to go. All right, cool. I really want to emphasize the importance of each of those red flags. I received so many emails, DM, even emails from my own Saka student. All those messages are from hungry, eager, clever people. But they want to believe so much that there is a deal at the end of the tunnel that they disregard all the flashy red flags. And then they just exhaust themselves running around aimlessly to end up being scammed because they wanted to believe too much. The other day I was in a call with a dude, very smart guy coming from finance, and he was explaining to me his deal. And I was like, man, there is no deal. There is no deal here. I'm sorry to tell you, but there is no deal. And he was like, no, but you don't know the guy that I know him very well from a friend. I was like, no, there is no deal. Trust me, I've been doing that for 15 years. There is no deal. And I could see in his eyes that he didn't want to believe what I was saying was true. I mean, that was such a poor kid because he said, I put so much money aside for that. I'm running out of money. Now I'm in this situation. But he couldn't let go. Anyway, red flag number 1. If the counterparty asks for a POF, proof of funds, I immediately cut the communication. Ciao, bye-bye, au revoir, adeus, auf Wiedersehen. Proof of funds is a document or bank statement verifying that an individual or entity has the financial ability to complete a transaction. If you ever run a company, especially an import-export company, a trading company, you know that your cash position is extremely dynamic. You have receivable, you've made prepayment, the money always comes in, comes out. I mean, nobody has like a stack of cash waiting for a deal so they can show their bank statement that they have money in the bank that they can send to you. This makes no sense. So don't waste your time with amateurs, seriously. Let me tell you a little story about Grandma Energy. My partner, he came to me one day and said, look, someone gave me this contact of that lady, blah, blah, blah. She has a producer that could offer us this product, a good product, below the market price, high volume. I mean, the story was already sketchy from the beginning. I was like, okay, I think we don't work with broker and there are good reasons, so no, we don't do it. And then he pushed, and I was like, okay, I mean, we've just been starting to work together. I was like, okay, let's teach him a lesson. All right, let's see. I think there is no deal. I think there are scammers, but let's see where it goes. Obviously, down the line, they ask for a proof of fund. I was like, okay, let's do the proof of fund. I think it's to send a proof of fund, honestly, because the scammers can use your proof of fund to scam other people, but anyway. And down the line, what happened? Nothing. Because they wanted, of course, prepayment. Then we said we won't prepare. And then they said, yeah, but we can do 25 trucks a day from that factory. Then we check the factory. We asked people that knew this factory. And obviously, it's impossible for that factory to do 25 trucks a day. The whole thing was a scam from the beginning. But anyway, so proof of fund, don't waste your time. Just move forward. And before I carry on with the red flags, there is one thing that I really want to explain. It's like in physical commodity trading, in niche commodities like the one that we trade, the biggest risk is not the market risk, is not the operation risk. The biggest risk is the counterparty risk. With the counterparty risk, you can lose everything. This is why you must have extremely high standard for the counterparty that you deal with. All right, flag number 2. When you start a new conversation with a new counterparty, the standard questions like, all right, guys, where are you buying from? From which supplier? Are you buying your product right now? what are the specifications, what are the target price, how long are the lead times for your current supplier, can we maybe sell something with a shorter lead time, what are the payment terms that you are currently buying from, and so on. And sometimes some people are quite defensive when you start to ask like all those questions and you don't even know them. But usually what I always do is like, I'm just explaining. I'm like, all right, guys, so I'm asking all of those questions just to make sure that we are a good fit, that we can work together. So you can also ask me all your questions that you want. I'm an open book. And by doing that, usually people like a little bit lose up and then give all the information. And if someone doesn't really open and doesn't give clear information about what they do, doesn't give names of company that they buy from or that they sell to, if someone is very defensive and doesn't really give any information, then I just, again, cut the ties, ciao, bye-bye, auf Wiedersehen, I don't want to speak with you anymore. That's it. So this one is easy to understand. I mean, when you deal with international companies, small companies, sometimes people don't even speak the same languages as you. So if that is the case, don't even bother. The other day, again, one of my associates, he said like, look, Damien, I potentially have a buyers in Italy. And I was like, okay, did you speak with him? Yeah, or WhatsApp. I was like, no, but did you speak with him? He said, no, the guy doesn't speak English or Italian. I'm like, but do you speak Italian? And my associate said, no, I don't. So how did you do that? Yeah, I use Google Translate. I'm like, no, stop, please, stop wasting your time. Even if the guy is a real buyer, we can't deal with someone that we cannot understand his language. I mean, if there is a claim, how do you handle that, man? Again, here, poor communication, cut the ties, don't waste your time, because down the line, it will not end up well. And just to carry on with the idea that your biggest risk in niche commodity trading is your counterparty risk. Just think about it. With a counterparty risk, you can lose everything. So have those numbers in mind. Let's say that you do 5% margin with your trade. You would need to do 15 trades in a row with 5% margin to make up for a 100% loss. 15 trades, all right? So can you imagine that? And let's say that a trade took 2 months to unravel. It's 2 months times 15, it's like 30 months, almost 3 years to make up for a 100% loss. So think about that. If the new counterparty asks for a LOI, then immediately I cut that, ciao, bye-bye, auf Wiedersehen. For those that don't know, LOI stands for letter of intent. The LOI serves as an initial step towards formalizing a transaction and facilitating due diligence. It signals the parties' commitment to proceed under the agreed terms while laying the groundwork for a more detailed and legally binding contract. So the only time that I use a LOI, it was a 30 pages LOI, and it was for the purchase of a mine, a real mine for multi-millions US dollars, okay? So in that case, it makes sense to formalize a LOI, a very long LOI, so then all the parties agrees before the due diligence on what is going to be the term of the engagement. But we're talking about a real asset. But now on LinkedIn, I saw a lot of people stating that the first step of any transaction is a LOI, which is completely untrue. The reason that all those brokers ask for a LOI because they want to have your LOI, which state their name, so then they can go see the suppliers and show, look, this paper, I have this paper that proves that this guy is my client and you need to pay me commission. So this is the only reason that they ask for a LOI. And it's a awful reason, because it means that this brokers doesn't have a good relationship with the supplier. Otherwise, he wouldn't need a LOI. So yeah, don't waste time with brokers, seriously. And by the way, this is a good transition to the rules in all of my company. There is one rule that is true for all of them. We don't deal with brokers, intermediaries, mandate people, or whatever. We don't deal with someone which is commissioned by a counterparty. That's it. And the reason is very simple to understand. Relationship compounds, so the more you work with a supplier or a buyer, the more they trust you and the easier it gets. But if there is someone in the middle, on the long run, it hurts your business because you can't compound the relationship, and this is the true value of a physical commodity trading firm. So this one is going to be quite quick and it's quite easy to understand. If the suppliers doesn't want to give you the information about where the feedstock is coming from, or if they don't want to give you a lot of very important details, and details that are not strictly payment price, shipping date and so on, but details that are important for you to assess the risk of dealing with them. If they don't give you those details, then just leave it. Don't waste your time. I understand that this is costly and it takes time to do a proper due diligence, but here really lies a difference between the professional and the amateur. All right? So you can see on the screen here the minimum vetting list. So it's basically what I teach in one of my courses. Or this is the 4 points that you really need to check carefully before getting in any commercial transaction with anyone. Obviously, a proper due diligence would need way more points, but here, just the thing that you definitely need to check before sending money or getting product from a counterparty. All right, guys, so this is the most important. If it's too good to be true, then it's too good to be true. That's it. I've never seen a case where there is like a deal that was too good to be true, that was a real deal. Never, ever. Look, guys, we're in the commodity business, all right? So there is a market price. There is no reason for anyone to sell below the market price, unless it's a scam. All right, so that was it for me today. I hope that you liked this video and that you learned something. If you want to break into the commodity trading world, please check the first link in the description below this video. There is a link to the Shipping Commodity Academy, which is my academy where we teach young and eager people how to break into the world of commodity trading. And yeah, please make sure that you use this list with the 7 red flags to screen all your deals with potential new counterparties. Because man, be careful, especially when you are quite small and new in this industry. There's going to be a lot of people that will try to take advantage of you. So please don't waste your money, don't waste your time. Be clever. Most of the time, people get scammed because they disregard huge, flashy red flag. Please don't be that guy. Okay? Okay. I know we all want to make money, but man, don't let it obfuscate the reality. Ciao.